Hello and welcome to the Sweaty Startup. I'm here today with Nick Bradley. I met him because he runs one of my favorite podcasts, Scale Up Your Business. Talks about a lot of these issues that I talk about. He is based in the UK, born in Australia, travels often and does a lot of business in the USA. He founded the Fielding Group, which is a consulting company. He works with private equity firms to do mergers, acquisitions, scale ups. He's bought and sold multiple businesses over the past decade. Nick, I'm happy to have you on the show. Thanks for coming. Tell us a little bit more about your story.
Yeah, absolute pleasure, Nick, to be on the show. And as I said, I'll try and keep the story as brief as possible because it goes back a little bit. So I suppose if you go back to the very, very beginning, I started my first business when I was 18. And I think it's a bit of a rite of passage. If you're going to go into kind of scale up and some of the stuff I do now, you've got to go through that sort of entrepreneurial founder journey at some point. So I did that when I was 18. I started a very small fitness business when the concept of personal training, if you like, wasn't really a thing. We're talking about the sort of late 80s, early 90s in Australia. These days, of course, it's massive and all that. So I sort of founded that business. I grew it up to a certain level and I sold it. And I'd done all that before I was 21. And then I made a massive pivot, and I'll kind of go into the reasons why. I went into sort of the corporate world, partly because I got a great opportunity, which was to be the marketing manager of Men's Health magazine. And I sort of got stuck in that world for literally a decade, maybe a little bit longer, actually. But I was always this frustrated entrepreneur that was trying to be, I think they call it an intrapreneur. I was in these businesses being a bit of a rebel, being a bit of a maverick, being quite successful if I'm sort of honest about it, because I got promoted up to board level before I was 30, and I was running big divisions of companies, if you like, the PLCs for Fortune 500 companies before I was certainly 32. But I had a bit of an epiphany where I started to get really, really stressed, and I started to get really kind of outwardly just not feeling comfortable with what I was doing. I wasn't congruent with my values, and I certainly wasn't congruent with my mission. And I know that now, but in hindsight, you don't know. And the one thing that happened is one night I went to sleep, and I must have been doing a deal or something like that for whoever I was employed by at the time. I can't remember exactly the specifics, but I went to sleep and I grinded my teeth, or ground the tooth, if you like, so much so that it actually cracked the whole tooth. So I was that stressed going to bed that I boom, wake up in the morning, and it's crazy. So it was that point I decided I've got to burn the boats. I've got to go back to what I was meant to do, rekindle the entrepreneurial journey. And since then, I've been working with private equity firms, going into businesses that are struggling to scale, and turnarounds as well, businesses that have been invested in by private equity. And more often than not, there's something wrong that needs to be fixed. And I describe myself these days as someone who can problem solve and go into a business very, very quickly and work out exactly what needs to happen to line things up for that to drive and accelerate growth. And I do that for myself across a number of businesses. I have investments myself these days. But more often than not, I just like helping entrepreneurs and investors scale up their businesses to create value, build wealth, and ultimately live life on their terms.
All right. That's great. So before we dive in, I'm not even sure where to start here. But, yeah, let's dive more into your story as we go here. But right now, I think is one of the best times to buy a business. And I didn't really realize that until I started listening to you. I started a business. I've never really shopped for a business. And I thought, why would anybody buy a business when you can just start it? You can do it right. You can get this momentum from the ground up. You can build it exactly how you want it. What are you seeing out there, Nick? And I know that a lot of these entrepreneurs are getting near retirement. A lot of these businesses don't necessarily have children, grandchildren, friends, family to take them over. What are you seeing out there?
Yeah, so there's a couple of things. Let me sort of paint a bit of a picture around it. So first and foremost, you're seeing a massive shift in population, because what's happening now is the baby boomer age. And for those who haven't heard that term before, that's basically people who were born after the Second World War. They are now reaching retirement age and have been doing so for the last few years. So they're in their 60s, more or less. And what that's done is that has meant that there's this huge shift in wealth and where kind of investment, particularly around small businesses sitting globally, particularly in Western society. So I'll give you a statistic which I was told a few years ago, which is probably increased now, but it's still massive, is that there's 10,000 people per day in the United States retiring. And of that, there's a large percentage, I don't know the exact figure because it changes all the time, that are owner operators of their businesses. Now, these are not, and I'll get back to a secondary point in a second, these are not what we'd call sexy technology startups sitting on the West Coast. These are, mum and dad, profitable businesses. They might be services businesses like law firms or accountancy firms, chiropractors, doctors, that sort of thing. They might be industry-led. But the good thing about these businesses is they've been successful for a long period of time. Sometimes they've been running for 30 years or so. They've got a reputation, they've got customers, they've got assets, and you've got these distressed owners who are thinking, well, what am I going to do with this business? So what I say to people is, do you know what? Why go through the pain of starting a business when you've got, this day and age, probably more businesses starting than has ever happened in history because it's become fashionable and romantic to do so? Why go through that pain when, if you want to get into a business, if it's about wealth creation, lifestyle choice, and all those sort of things, certainly entertain the idea of acquiring a quality business from someone who does not want that business anymore.
Okay, so if you're looking at this, what skill set or what time in your life is right to buy this business? I know that many of these owners, they own them with no debt. They own them free and clear. And basically the option is shut the business down, try to find an employee to buy the business. I mean, what time in your life is right to target one of these businesses to go after?
Yeah, so my view is there's no difference between, if you're an entrepreneur who's in their early 20s about to go into their first startup, there's no real difference between that and someone like my age who's 45, who's doing this more or less as a living and as a mission now. I'll get into the nuances of this because it's quite important, because the first thing that people say is, I don't know how to buy a business. And then the second thing they say is, I haven't got the money.
Mm-hmm.
And that's a pretty, particularly if you're in your 20s, you haven't had enough time necessarily to earn money to invest, to save and invest. But I'll get into those pieces. But to answer your question, the timing is not about whether you're ready. The timing is that the market is ready. And that's an important point. So if you have any ambition to do this, I would suggest getting some education, understanding what the opportunity is, and then start, trying it out and seeing if that fits with what you want to do with your career, your mission.
So go in, meet with the owners, research the business, figure out if it's a good fit for you. Is there a way that you should try it out before you dive in and shop, or how do you even spot these businesses?
I think the first thing you've got to, we'll get into deal sourcing in a second. The first thing you've got to ask yourself, and I, as you know, on my podcast, I talk a lot about the psychology and the mindset of business, because for me, it is the game, right? So you don't go into being someone starting a business unless you've really got a passion to do that. Now, my view is, if you feel that you want to go down the entrepreneurial journey, you've got a couple of choices. So the three that I always talk about is, you can do your own startup, you can become an entrepreneur in a business. All right, there's many traditional businesses that now want the entrepreneurial mindset, or you can acquire another business. If you feel that that's what you want to do, and the thing is you're better at being that owner investor, then what you need to do is understand how the market works. Now, there's a lot of different resources out there. I mean, I was interviewing a guy this morning on my podcast called Jeremy Harbour, who runs the Harbour Club, which is actually a community of deal makers. So that's a resource which is worth looking into. One of my mentors is a guy called Carl Allen, who does leverage buyout. So what I've done to get my experience is, obviously I've worked in private equity, so I've done this at a high level. But to focus on these smaller businesses, I've gone out there and got mentors and got education myself to work out how all these things can happen. So that's the first point. To answer your question, how do you find these businesses? So first and foremost, there's two types of acquisitions to be made. One is a distressed business, and that is where it really needs to be turned around. It's not making enough money. It's on a trajectory that potentially could mean it's going to get closed down anyway. And the psychology into that type of opportunity needs one where you're going to buy the business for $1 or £1, and you're going to have to get the cash flow in that business working really quickly. Now, you don't have to be an expert yourself in financial gearing, but you need to have an understanding that needs to happen. You have to be very good at managing the process and having people that you can joint venture with to be able to go forward. But it's a bit like buying a house and knowing that it needs to be renovated. You're not the person who's going to go in there and do the carpentry and fix up the salt damp, or get the decorating done, but you are going to project manage that piece because you have bought the business and you own it. So the principles are the same. The second type of deal you can do is called a leverage buyout. And that's where you're buying a really good, profitable business, probably off a distressed owner, the point I made before. And that's where you're going to be using the profits of the business to buy it over time. And I'll get into how you do that. But the way you find these businesses, firstly, you can look at the brokerage sites. I don't always suggest using brokers, but there's a fantastic resource in the US called Biz Buy Sell. And there are lots of businesses on there that are set to sell, and some of them haven't sold for months. So you can start to work out what type of business you want and start to look around there and do some scoping. I get my deals from accountants, from lawyers, and literally the golf club. So people know that I buy businesses. I've set that out as my reputation. So when someone has a conversation with someone else, then they know to come to me. And the way I've done that, just to give you a simple tactic on it, is, use LinkedIn, use social media to make it known that that's what you're doing.
A personal marketing approach, literally getting to know these people, and so that they know you, they can trust you, they can see what you do, and you can get in and talk to them.
Yeah, and it's a numbers game because, as I said, it's a buyer's market right now. So I have at any one time 20 to 30 deals in a pipeline. And exactly what you said, Nick, is it's about rapport, it's about trust, it's about authenticity, because it surprises people. A lot of the people who are selling businesses are not necessarily looking for money, which is crazy, right? Because someone our age, or certainly not in their 60s, might be saying, actually, it's about a big exit, a big capital event, as I call it. But someone who's 65, who might be sick themselves, or God forbid, their partner or some of their family's sick, they don't want to turn up to work anymore. They haven't got a succession plan. They've had Doris, the accountant, who's been with them for 25 years, and they certainly don't want to sack her. There's a reputation to be kept. A lot of times when people want to sell a business, there are so many other things going on. They just want to leave it in good hands. They want to sell it for fair value, but they're not looking for really high multiples, so you can get these businesses for a very good deal.
When you say buyer's market, what do you mean by that? I mean, how expensive are these businesses when you look at them?
So it's more of a supply and demand question. So at the moment, as a buyer of businesses, I have too many businesses out there to choose. This is what I meant. The 10,000 people retiring every day. There is a statistic, I wish I had it here, but I think in America alone, there's something like 2 to 3 million small businesses, something like that. So when you think that you just want to buy one, and to be frank, it's not just every business is going to be the right profile. So what I suggest to people is, if you want to go down this journey, the first thing you've got to do is you've got to set the parameters for what you want to buy. Okay, so just to unpack that a little bit, first question I say is, do you want to be an owner operator or owner investor? The difference being, if it's your first business, perhaps you're a bit younger, you may want to go in there and assume the role of the CEO or the managing director. If you're an owner investor, you want to buy a business where there's some type of succession going on, because what you're going to do then is you're going to be like the chairperson or the president. You're going to have someone run the business for you. And if you do that, that's how you can end up having multiple businesses, because you don't have to be there day in, day out. Second thing I say is, where does it need to be located? So I look for businesses where I like to go on holiday. So at the moment, I'm looking to buy a business in Florida because we like Florida. We live in the UK. But, it's an important characteristic. One of my mentors has got 7 businesses, and he's got populated around the world, where he likes to go, and he visits each of those businesses every 3 to 6 months. So that's it. And then the other thing, that's crazy, isn't it? And the other thing I say is, you've got to also have a couple of sectors that you like. So I like professional services and I like media. Professional services is pretty broad. And what have you done, in your career that you're good at? So I'm good at sort of marketing and sales. So I look for businesses where I can bring that to the business. Other people are good accountants. Other people are good, just general managers, leaders. You've got to have something that you've got a bit of experience in. That's why I said you can do this when you're young, but it's probably best to know what your, I hate the term, but I'll use it, the superpower is, because you do have to go in there and add something to these businesses to get the growth.
Okay, so this all sounds really intimidating to me, especially buying multiple businesses, bringing somebody else in to run them. Let's talk about a micro business. Let's talk about how somebody might frame a really small deal. Say there's a mom and pop in their town where this guy is not only owning the business, but he's also very involved in it on the day-to-day. If he steps away from the business, it's going to implode and it's going to be worth nothing. I think there's a lot of deals right there too. Like you can, like you said, you can buy it over time. you can structure it in creative ways, especially if the owner is debt free and he likes you and he wants to work with you and have his business live. Like you said, it's kind of an emotional thing, right? Passing on a business is super emotional. So you mentioned buying it over time. How do you creatively structure some of these deals?
Sure. So the first thing is, if the business is too small, and by that I define if it's under sort of annual revenues of $500,000, then you're usually not buying a business, you're usually buying a person.
Mm-hmm.
So, again, it might be someone who's got a business where there's 3 or 4 employees. As soon as that person goes, you're picking up everything. So that may suit someone who, as I said, wants to be that owner operator, particularly if it's your first business and you just want to buy something that you're passionate about locally. But my recommendation is always look for deals that are between 500,000 to 5 million, because at that scale, you're going to be able to have more employees, you're going to have options, and it's probably running with some systems and some processes which allow you to not have to be involved in the day-to-day. So that's the first thing. In terms of the structuring, so if you talk about a leverage buyout, which is where you're getting to, this is usually what you need to be able to do if the business is not distressed. You do 2 things. You look for finance based on the assets in the business, and I'll make this as simple as possible for your audience. All that simply means is, there's a certain number of things in the business where you can take a capital asset loan against, and usually you can take those loans out for 10 years. And it's exactly the same in principle as a mortgage, because you're essentially taking the loan out on the asset. So you don't even have to own it, but you have the intention to own. So if it's a manufacturing business, of course, you can have plants and material, very good businesses because there's actual fixed assets. If it's a services business like the ones that I get involved in, the most lucrative asset that I can leverage is the receivables. So you can usually get a loan of around about 80% of the receivables. And I'll give you, if it's useful.
And when you say receivables, what does that mean?
That's essentially the money that's owed to the business that hasn't been paid yet. So it's cash, if you like, to some extent, because it's the deals, but the actual offering's been done, you just haven't been paid. So let me unpack a deal for you, just so I can sort of make it come alive. Let's say, for example, there's a small business that you like local business, and it's making $500,000 a year, and it's making about $100,000 in what we call EBITDA, which is profit, earnings before interest, tax, et cetera, et cetera. You buy the business essentially on a multiple of that profit. And I always advise,
what's a typical multiple that you see?
Okay, in this market that we're talking about with small businesses, anywhere between 2 and 4 times maximum.
Wow.
Okay, now if you go up to where I work in private equity, the multiples are significantly higher. They can go up to 8, 12 in technology business.
Less risky. The less risky it is, the more value is there, the higher the multiple.
And the reason I suggest businesses between 500,000 to 5 million is they're just below the radar of private equity. So that's important. So you're not competing in that space. But to unpack that, so let's say that business is making 100,000 and you're going to put an offer of 3 times. So that's 300,000 pounds that you're going to give to the owner for them to be able to walk away from the business and not go to work anymore. Basically, that's the pitch. You don't have to worry anymore. You can go and be with your family, retire, whatever it is you want to do. Now, you're not going to be able to get a asset finance loan for 300,000 pounds fully. You'll be able to get a certain percentage of that. Whatever is the remainder is what you agree in what we call a vendor or a seller finance deal. And this is the other piece that's important for people to understand. So let's say, for example, I get 100,000 of the 300,000. 100,000 is going to come from the asset loan, and then I've got 200,000. So that 200,000 I'm going to pay over 3 years, and once 3 years is done, then I own the business outright. But if you work out the payments and the percentages, you're still going to be making money on the profit of that business, maybe half of it, maybe a little bit less, for 3 years. So it's going to be enough that you've got an income coming in. And remember, if you buy a business where someone is still in there, you don't have to be in there. So it can be a side passive income to some extent. So I know some people who have 3 or 4 businesses they own, they make 100,000 from those combined businesses, but they still have another business that they are involved in that they do on a day-to-day basis.
So you're saying you can buy these businesses with very little of your own capital, and they can be cash flowing from day one?
Yes, because they're established good businesses. There's a couple of risks in it. I mean, one is, your ability to be able to scale it, to pick it up from the owner operator. So you've got to be confident that you can do that. And that's probably one of the big, again, it's a mindset psychology thing. When you go into a business, you've got to believe that you can do that. And then the second thing is sometimes owners ask you to guarantee the seller financing. I never do that personally. And if someone is religiously, fixated on me doing that, then I'll move on to the next business.
Which means you're putting your personal assets and personal lines of credit on the line with the purchase.
Yeah, and a lot of them ask for that, and you can get insurance against it. But my view, back to my sort of buyer's market point, there are so many businesses out there, and if you've got a pipeline of 20 to 30 and you're not romantically attached to any one business, which is the tricky bit, then you walk away. And what happens is these people then, they get quite desperate, and they're like, well, actually, you're the only person who's knocked on my door in the last year. So you have a huge amount of negotiating power. And there's fair value for them and there's fair value for you, but you don't need to compromise on what your position is in those things.
Okay. So let's say you went under contract on this business. You haven't yet bought it. You've thought about how you're going to structure it. You're under contract. Then what do you do? There's obviously a due diligence period where you get to really dive in. And what are you trying to learn during that time frame before you close on the business?
Yeah, there's two things that are critical. The first thing, and this is probably the number one thing for the type of deal you're trying to do, is rapport. So none of the stuff of how you structure the deal, any of the things I've been talking about, you don't even get into that in the first couple of conversations. And in many cases, what you're trying to do is show the owner that you're a trusted pair of hands. You are the right person to take on the business. So I always say, don't get too technical early stage. Be very much about, empathizing with where that person is and actually trying to help them. Without any expectation. That's what I do. And I'm also evaluating the business. I'm asking questions about where the gaps are. But if I get a sense that I don't feel the person's run the business very well, then that's also a thing for me in the early stages to say whether I want to get involved or not. So that's the first piece, rapport. Once you get into a few stages where, let's say you get an offer agreed, the due diligence that you need to do is relatively light touch. I mean, I with the size of businesses we're talking about, it's not like there's a whole heap of things hidden, in the floorboards, to use the expression. Mm-hmm. You do need to get an accountant and a lawyer to go through the structuring. So if there's any costs that I pay personally, sometimes I'll pay for those costs or I'll take it out of the business as part of the deal. But that can be a few £1,000s here and there. It's not crazy numbers. And when you think you're buying an asset that you can pay yourself back that money straight away as soon as you've done the deal, the only risk is whether you don't go forward. So I only ever use those specialists when I'm pretty close that the deal's going to happen.
Where do you find those? Is it just real quickly, where do you find what type of attorney, what type of an accountant helps you with this stuff?
Yeah, I mean, it's usually corporate finance, but because the deals are small, I have a network of people that I've connected with through my own education, like the Harbour Club I mentioned before, where you can, what we call JV on deals. So if I go into a deal in the US and I need some help on the finances, I know that I can go into that community and find someone who can help, and I can either choose to pay them, or if I know them well enough, I can actually JV and we can share the equity in the business.
Mm-hmm. Okay.
But that's fine. You've got to trust the people to do that. But the only other bit of due diligence that's worth looking at is I definitely look at the marketing and sales strategy. I look at the pipeline. If we get a fair way down the track, I will also call up and speak to customers. Because what I'm usually doing with these businesses is I'm looking whether they've got a stable base. And then I'm usually going to pivot the business with marketing and stuff that they haven't been doing, because many of these people don't know what progressive, digital, social, they don't understand how to introduce those concepts. So that's the value add that I can bring.
Okay. Would you be willing to walk us through a deal that you have already closed or that you have found and kind of how it worked quickly?
Yeah, sure. I can take you through a small recruitment business if you like. So
perfect. Yeah.
I'll start at the very beginning. So found the business in my local cafe. Literally.
This is a UK-based business?
UK-based business, yeah. So found the business in my local cafe. There was a person there that I was talking about some of the stuff I was doing. He had a coffee with another person, and that person then sought me out because they had this, business that they couldn't sell. It's never a simple process in the beginning because there's a bit of nervousness on both sides. So there was 2 or 3 meetings of just talking about the business. So not even going into it. It wasn't based locally to me, but it was just trying to get an understanding of what their expectations are. So first and foremost, if they were wanting a lot of money, if they were wanting certain things that don't fit into the profile, then I would have walked away very early stage and not wasted any time. So the first piece is a lot of asking questions and building rapport. Once we got past that, and the second stage, if you like, is an NDA. Sometimes the NDA comes quite early on, but the NDA, the non-disclosure agreement, is the thing that you want to get to relatively early stage so that you can start to look at the finances of the business. And then what I do is I've got a very simple spreadsheet, a very simple model where I'll add both elements from the P&L, the profit and loss of the business, and elements from the balance sheet. And that will give me a metric that will then tell me whether it's worth doing the deal or not. Now, if you haven't got access to those things, again, you can educate yourself to get access to those things. Or you can work with an accountant who can help you with that as well. But essentially what you're trying to do is you're trying to work out whether the business can be financed effectively so you still have some profits to play with, or whether there's too much risk on that financing because of the size of the business or where it is. Okay, so that piece is reasonably technical without going into the detail of it, but it's an important piece because, again, each of these are like stage gates. If it becomes too difficult at any stage, you want to have another business in the pipeline. So the way to envisage this is I might be having multiple conversations, multiple things going through the spreadsheets, and there's a few that bubble up to the top, and you constantly want to be filling the bottom. So one of my mentors says you have to become a deal-making machine. And what I do now, Nick, is I have a couple of VAs, virtual assistants, who are doing deal origination all the time. So,
wow.
Yeah, it's cheap.
This reminds me of real estate. It reminds me of real estate. To buy a rental property, to buy a piece of real estate, you're going to look at 100 deals before you buy one.
It's exactly everything I'm talking about is the same as buying a house. What's interesting about it is I always say, if you're going to become, this is going to become your vocation or whatever it is, be passionate about what it is. So for me, I'm passionate about businesses. So therefore buying, selling businesses is exactly the same as doing real estate. Just make your choice, right?
Except the returns are a lot higher because it's a buyer's market. In real estate, it's not.
Yeah, and there are higher risks because businesses can, in some cases, be more organic. But that's why I say, if you stick within your lane to some extent, certainly in the beginning, if you know the sector, let's say you've worked in a marketing agency for years and you're going to buy a marketing agency, you kind of know how it works. So I always say, try and focus on that in the beginning.
Wow.
But to run you through it, so NDA, deal model, does it work, does it not? If it works, you then want to get to an offer, and it's around that point that you introduce the financing. So you'll be asked very early on, how do you finance this deal? How are you going to finance this deal? And people want to know whether sometimes they ask the proof of funds. You say no to all this. You don't get involved in that because, how can why should I show proof of funds when I don't even know if I want to buy the business? So there's a lot of times that you're going to have to deal with objections, but as you're building rapport, they go away over time as well. So when you get to the offer stage, you introduce the concept of how you're financing it. And because you've already had access to the financials, you'll have an understanding of how the deal could be structured. And there are some specific asset finance companies you can speak to in advance who can give you agreement in principle. So you're kind of getting everything lined up. And then what you want to do is you want to prepare anywhere between 4 to 6 offers. And you're going to stage those offers every 3 days. It really is a process. Because the first offer might be 1.5 or 2 times the multiple, whatever you think is advantageous, but you're expecting that they're going to knock it back. But you want to manage expectations early on. So halfway through, let's say it's your 3rd or 4th offer, that's the offer that you're comfortable with. And if you go to 5 and 6, it's because you really like the business and you've built a bit of leeway in the structuring so that you know what you can do.
Wow. So you ended up buying the business that you were talking about in the coffee shop.
Yeah, we bought it and we sold it. So we had it for about a year, and then we sold it to someone else who interestingly came on late stage, who wanted to consolidate with something else in their area.
Wow, that's awesome.
So there's more to it, and you can see why we haven't got time today to go into the details.
Yeah.
And I don't want it to feel overwhelming and confusing to people, because it's like anything. Before you've ridden a bike, it's difficult, but as soon as you learn to ride a bike, it's easy. There is education that needs to happen before you feel more comfortable and congruent with this sort of stuff.
Yeah, that's great. So how do you, what do you feel about franchises? There's a lot of franchises in the United States. I personally feel that the model is sort of dated. You're paying for a lot of resources that are not necessarily cutting edge. Have you bought or have you looked at any franchise deals?
I personally don't, mainly because they're not as popular in the UK market. And when I've looked in the US, and we haven't done a deal in the US, so we're in the process of trying to close the first deal now. I know that some people who I've worked with in the US have done really well out of selected franchises. But I think for me, if you need to have all the processes and you need to have everything just given to you on a platter, and you understand broadly, that you've got differentiation in the market, so the region, whatever else, I don't think they're a bad thing. But for someone like myself, who's probably got a bit more experience in business, my recommendation would be go into an established business where you can add more value, because it's very hard, I think, this is just my personal opinion, to add lots of value to a franchise because you've got so many constraints. You can't change the branding half the time. You might be able to do some clever things, but you're stuck in a model which is very predictable. Whereas if I can go into a business like, let's say, a marketing agency, which is what I'm looking at the moment, I'm looking at traditional PR and comms agencies that have got great businesses, but literally still send out press releases on press wires. What I'm going to do with that business when we buy is I'm going to turn it into a social media agency. So digital PR. And I'm going to be introducing new products and services on a customer base that already is established, so I can scale it with something new. Franchises, from my understanding, are very limited in that ability to do that.
Absolutely. Absolutely. Okay. This has been absolutely great. I appreciate it. I think we'll cut it there just to respect your time, but where can people learn more about you? I think once somebody buys a business, once somebody goes in, or if they're running a current business, that's when it's time to listen to Scale Up Your Business to get Nick's thoughts on his management, his mindset, his principles. Do you have any parting advice for somebody who is a manager, somebody who just wants to become more successful at the mindset required to run these businesses?
Yeah, there's a couple of things. As I said before, mindset to me is the game. And when I did that pivot back into entrepreneurship, and this is in my podcast and people can hear my journey, I'm very transparent around it. I went and did a lot of personal development myself to kind of make sure that I had the right belief systems and structures. Because what happens, I mean, when I mentor people who are usually, they've got their own businesses and they're struggling to scale them, more often than not, and I don't say this from the outset, the bottleneck is the person running the business. And usually something's happened where their belief system, their identity, all of those sort of things has just shifted because they're either time poor, cash poor, or something's happened. So the first thing I say to people is, you've got to feel passionate that this is what your vision is for your life. So that's why I say, I've mentioned the word mission many a time. I don't believe you go into this vocation just because you want to make lots of money. You go into the vocation because you want to add value to people, because you can help people. You're helping these people who can't sell their businesses. Of course, there's fair value exchange that you're going to create wealth for yourself through this. That's absolutely fine. But you have to make sure that that's right. So the first thing I say is be clear on your vision, know your why. Yeah, get crystal clear, write that down. If there's any gaps about, oh, I'm not good enough, I don't think I can do this, whatever else, you've got to go and do some personal development. Stuff I've done a heap of Tony Robbins. You and I have had connections with Rock Thomas. There's a lot of people out there who are very good on mindset. When I made my pivot towards what I do now, I had two lists. I had a list that said personal development and I had a list that said professional development. And what I did is I sought out what I thought were the best people in the world, the best mentors I could find to rebuild what I wanted to do to achieve my vision. Yeah. So again, that's what I suggest to people to do. So if you want to do any of this sort of stuff, start with that. As I said, I've got a few episodes people can listen to, and hopefully some of those on mindset can give them a bit more of a pointer. But I just think, you've got to, if you want to be happy in life and you want to feel fulfilled, you've got to do something which is congruent with, what you're on this earth to do. And a lot of people settle for things that aren't that, and that's why they end up being miserable.
Yeah, part of it involves taking a step back and just looking at life through a uncluttered, unrushed eye, and that's the hardest part sometimes.
It is, but it's good. And I think, as I said, I'm always, one of my things is always helping people without expectations. So as I said, if anyone wants to reach out, they can get me. Best way to get me is through LinkedIn. So have a look for Nick Bradley, Scale Up Your Business. I've got my website for my business, which is fielding.global. But I get lots of people every day coming asking me all sorts of crazy things.
Yeah, thank you so
I'm happy
much.
to help.
This is awesome. Thank you so much for taking your time. I think this will add tons of value to me personally, because I'm kind of changing my mindset towards look at opportunities that are out there already to buy, to get involved. And I think a lot of people are listening to this, getting kind of excited. So it's great.
Good. Excellent. Listen, thank you very much for having me on the show, Nick. Absolute pleasure. And yeah, anytime you need any help, more than happy to assist.
Appreciate it.